Mr. Ade, you're welcome. Thanks for joining us. And my president,
Good morning.
Mr. Joshua.
Yeah, good morning.
Good morning, sir. How are you doing, sir?
Yeah, I'm fine, thank you.
Okay. Good morning to all our amazing participants. Trust we are doing great today. Sorry, can you hear me?
Yes. Yes, we can.
Okay. All right. Thank you so much. My name is Mary Ohaleto-Uwoma from the Marketing and Business Development team of First Central Credit Bureau. Yours truly, first and independent credit bureau in Nigeria. You are all welcome to today's webinar themed Harnessing the Benefits of Cashless Policy on Credit Allocation in a Developing Nation. I take the theme again, Harnessing the Benefits of Cashless Policy on Credit Allocation in a Developing Nation. You can all agree with me that we have an interesting topic before us this morning, considering the past events of the last few months and weeks. Yeah, there are a lot of questions begging for answers from the general public, lenders, borrowers alike. Questions like, is our economy ripe for a cashless? And how do we take care of the unbanked, underbanked population of the economy, and so many other questions. So it's on this basis of unanswered questions that First Central Credit Bureau, your best preferred and trusted credit and information reporting agency in Nigeria, decided to treat this topic on this webinar as part of our corporate social responsibility by creating a platform where the Central Bank of Nigeria, being the policy owner, and different institutions like microfinance bank sector, fintech, commercial banks, and others to bring clarity to what this policy is all about. Please note that this event is being recorded and will be shared with all registered participants. And also we are aware that we have a lot of people connected to this live broadcast via our different social media platforms. So kindly drop your questions and comments at the Q&A section so that we will all attend to them at the end of this program. So without wasting time, let me introduce to you the speakers of the day in no particular order. We have a team of 4 speakers led by the host of this event in the person of our able, vibrant Managing Director, Mr. Oladimeji Peters. Mr. Peters, you're welcome, sir.
Thank you very much. Thank you very much.
And our first speaker I'll be introducing is from our regulator, Central Bank of Nigeria, the Director of Banking Supervision, Director Haruna Bala Mustafa, ably represented by Mr. Adeniyi Adekunle. Mr. Adekunle, you're welcome, sir.
Good morning, everyone. Thank you, Mary.
Thank you. Welcome, sir. So our second speaker is the National President of the National Association of Microfinance Banks in Nigeria, in the person of Mr. Joshua Okute. Mr. Joshua, you're welcome, sir.
Thank you. Good morning. Good morning.
Thank you, sir. Good morning, sir. So our third speaker is the head personal banking in First Bank of Nigeria PLC, in the person of Mr. Ikemefula Nwachukwu. You're welcome, sir.
Good morning, Mary, and yours. It's my pleasure to be here.
Thank you, sir. Our fourth speaker is the President, FinTech Association of Nigeria, Mr. Ade Bajomo. Mr. Ade, you're welcome, sir.
Thank you, Mary. Very pleased to be here. Thanks for the invite.
You're welcome, sir. Lastly, I have a co-moderator on this event in the person of Mr. Olalekon Abbas. Mr. Abbas, you're welcome. Sorry, you are muted. Can't hear you. Okay, so good morning. Thank you. Okay, we'll be moving straight to the welcome address by the host. So permit me to give just a summarized version of the his profile, the MD CEO of First Central Credit Bureau, Mr. Oladimeji Peters. Mr. Peters has over 15 years of working experience in business development and analytics, both within and outside Nigeria. He's a graduate of economics and holds an MBA from Durham University, England. He is a professional and associate member of various institutions, which include Nigeria Institute of Management, Chartered Institution Stockbrokers, Microsoft Corporation, Chartered Institute of Management and Fraud Examiners, among others. Join me as we welcome the MDC of First Central Credit Bureau for his opening speech. Over to you, Mr. MD.
Thank you very much, Mary. Again, to the panelists, I want to say a very big thank you. Once again, with Paul and Vivante, and thank you for gracing this occasion. To the wonder of the internet, our beautiful audience, thank you for gracing us with attendance and for the participation. We hope you're able to take one or two things away from this. Yes, well, the key thing, why we do what we do, speaks to the very idea of what's happening in the world. Are we going the right direction? Is this a positive move, or is this in fact a negative move? Are we creating a solution, or we are in fact creating a problem that looks like a solution? The idea of cashless, it's been argued here and then. It seems like a sensitive topic, especially at a political time like this. And so when you hear from both sides of the divide, there are strong arguments on both sides, but there's a growing number of countries all over the world looking at what's, adopting the idea of cashless. Well, whether or not that would further our interest as a country, all of this will be addressed here at the webinar. And we have the Apex Bank, CBN. They will also be modulating and seeing that we hear directly from the bank. And more importantly, we also have practical hands. We have masterminds, people that have ventured into the financial space and they have massive experience. So we can take from that practical utility and for our own purpose. I also think that let me just say a big thank you once again for joining. If it's okay, the other program, I think I may just proceed with one or two slides just to show a background as to to give a backdrop to what the guide is here today. And so the speakers will then speak on a more practical utility. But if media can please put on, yeah. So when we spoke about, I think some 10 years or so ago, was it 10? No, so about 6 years ago, when we started talking to traditional bankers about fintechs and psychometric analysis, evaluating customers on launching into the fintech or the financial space using digital. I remember at one of the meetings, I think with Rajis in we had said, the awareness for fintech at the time was not this big, and we said let's see how people can tap into the banking system, get access to credit without having to go through the regular paperwork. And we had made illustrations with the phone, and we said at the time that if there's one thing people have easier access to, it's the phone. And if there is any medium we can use to reach out to those that may not be financially included or the vulnerables, this is how we can, it's a good medium to get across to them. In a similar vein, for this particular discourse, we've adopted something similar in terms of what is it that people have access to everywhere in the world, or even in Nigeria as we speak, and it is time. When you look at the time on the number line, for instance, we just make a small elementary approach to numbers, and how that also reflects in what we call in financing and what we call -1, and systemic risk. So essentially, when you look at the number line, I won't go into details, but then when you look at it, geography, basically, you say 12 times 3, you have 36, and on the first right angle where you have 12 to 3, you have 90. So when you say 12 times 3, you have 36, Elementary, you say P plus 6, you have 90. That's your first angle. On the second side, the lower divide, you say 6 times 3, you have 18. 1 plus 8 again, you have 9. That's another 90 degrees. You go to the next line where you have the red divide, you have 9 times 6, you have 54. You know, again, you have 5 plus 4, you have 9. And you have another 90 divide on the left, and then you go to 9 times 12, where you now have 108. Now, when you have 108, essentially you have 1 plus 8, but then you have 9, but there's a 0 in between that doesn't go, it doesn't just disappear. The 0 basically means you're now revolving back from the left to the right. If you were to refer to the left as negative and the right to as positive, you know at any given time that when you bring both positive and negative together, you don't necessarily get a positive when you multiply them. So essentially, in corporate finance and in every other, and there's an extensive, analysis to this type of time analysis where you bring out the constants, your pile 3.14, the exponential divisor number. That may be not necessarily be for this audience, but what are we trying to say essentially? When CBN modulates, whether in terms of their policy with distributives or whether market dealers and market makers, the fintechs engage in the market, what are they trying to do essentially? They're trying to make sure that people have access to cash. But at any given point in time, when you give the money to people who are not willing to pay or unable to pay, what essentially happens is you are putting the money in the wrong divide and you've created something called a systemic risk. In other words, you are putting more negatives than positive. And so you have a vicious circle that revolves. The circle that says the original owner of the money does not get their money back. And the borrower is in fact not using the money for something, that should be the actual intention. And time is a constant, even in credit allocation, whether cashless or not. Time will always be there. It speaks to the maturity date and the repayment frequency. But then, extension, what we are saying is, when we look at all of this and we discuss this, what exactly are we trying to achieve? We're trying to make sure we're going on the right tangent. And more importantly, we're also trying to make sure that we are modulating or interacting in the market in the way that is most positive. In corporate finance, they call it better risk, I think, which is -1. It's a systemic risk when you do something in a way that does not engage appropriate with the market, or you don't interact with things properly. So we will be learning from the speakers, the panelists today, and hopefully we're able to pick one or two things, like we said rightfully. I won't go into the slides so I don't preempt the speakers. I will just we'll probably just learn. I will learn from all that they have to say, and hopefully I hope you are able to do the same. Once again, thank you for joining. It's great having you. Thank you.
Okay. Thank you, Mr. MD, for that brief introduction. Thank you so much, sir. Ladies and gentlemen, I'm glad to announce to you that today's webinar has what we call Learn and Win section embedded in it, where some of us will be going home with tangible gift of shopping vouchers worth 50,000 naira just by answering questions correctly at this event. This is quite different from our regular webinars, trust. So how do this work? At the last section of this webinar, you will be asked about 4 different questions derived from each of the speakers' presentation. The first to answer any of the questions will be going home with a shopping voucher worth 50,000 naira. You heard me well. So first section will be giving out a shopping voucher in total worth 200,000 naira to the first 4 participants that will be answering any of the 4 questions correctly. So we have rules for participation. Send your answer to the panelists with your name, email, telephone number, and organization name. The rules for participation: send your answer to the panelists with your name, email, telephone number, and organization name. So if I were you, I will listen attentively to all the speakers grab my pen and paper for jottings and make use of my keypad when the time comes. So I hope that information has been taken. So let's move straight to the business of the. So the implementation of this cashless policy, look as if it brought so much discomfort to the citizenry. And we are saying, what is the original intention for this cashless policy and its associated benefits? So therefore, it makes a lot of sense for us to first listen to the vision owners of this policy. There's Central Bank of Nigeria Director, Banking Supervision, represented by Mr. Adeniyi Adekunle, who will be our first speaker for today's event. Let me just give us a brief profile of the director, Haruna Bala Mustafa. Mr. Haruna Bala Mustafa is the Director of Banking Supervision Department of Central Bank of Nigeria. Prior to his current role, he was the Director of Consumer Protection Department. Mr. Mustafa had worked in several departments, garnering extensive experience in bank supervision, regulatory policy development, risk management, non-interest banking, financial inclusion, among others. He will be speaking from the regulator's perspective, the vision of the Apex Bank on cashless economy. So, ladies and gentlemen, let's welcome Mr. Adekunle to make his presentation on behalf of the Director, Mustafa. Thank you so much, sir.
Thank you very much, Mary. Once again, good morning, everyone. First of all, let me send the appreciation of the director to Fourth Central Credit Bureau for this invite. Fortunately, he's unable to be here today due to some other pressing engagement. So he's asked me to express his delight at this webinar and also appreciation to everyone that is here. Like Mary said, my name is Adekunle Adeniyi. I'm the Deputy Director in the Banking Supervision Department, working under the leadership and tutelage of Director Mustafa. Today, largely, we'll be talking about the Central Bank's vision around the cashless policy. And that's essentially what we're talking about. I'm not going to take much of your time. I'll just go through a few slides. Mary, I don't know whether you're projecting or you want me to project.
You can project, sir.
Hello, can you hear me?
Yes, sir, I can hear you. You can project, sir. If you want me to do that, we can.
Okay.
But we have enabled multiple sharing, sir.
Okay, all right. So I'll just share my screen.
Thank you, sir.
Is my screen available now?
Yes, sir.
Okay, all right. Well, like I said, well, I'll just be talking about the Central Bank's vision around the cashless policy. Sorry, my screen is not moving. Okay, all right. A brief outline about what are we talking about. Introduction to the policy, why we decided to introduce the policy, journey so far, some of the features and the benefits of the cashless policy, the impact as we see it from the CBN perspective as well. Now, as we all know, the journey of the cashless policy is more than 12 years old now. The intention has never been to eliminate cash. The intention has always been to reduce the use of cash and encourage electronic payments using electronic channels. And that's what we've been doing when we first of all introduced the policy. I think it was back in 2011 that we introduced it. We started with Lagos State as, and we called it Cashless Lagos, when the policy was first introduced. And this was extended thereafter to 5 other states. That was Kano, Anambra, Abia, Ogun State, and Rivers State, largely because from the data that we have, that was where the large volume of cash was being used. Incidentally, somebody might ask why Ogun State? Ogun State was chosen at that time because of its proximity to Lagos State. Now, it allows people to avoid using banks in Lagos State and going to do their lodgement in Ogun State because of that close proximity. So that's why Ogun State was selected at the time, even though the volume of cash in that state was not as much as in some other states as well. Now, over the years, we've also updated the cashless policy. We came up with several iterations of it, and I think the last one was the one in December 2022, which culminated, which was also following the announcement of the CBN Naira redesign. Features of the cashless policy has always remained the same. To try and reduce the use of cash, we introduced processing fee for cash withdrawals over the counter that exceeded a certain threshold, or cash lodgement over a certain threshold as well. Now, there was also a limit to third-party cash that you can cash over the counter. And like I said, all of these has always been to promote the use of other electronic payment channels. So you ask us why the cashless policy. We all know that Nigeria is largely a cash economy. Most of our retail and commercial transactions have principally been done using cash. Now, there's a high cost to this. If you look down the value chain of how the cash is, when you print cash, how the cash is transported from the means or from the central bank to the bank, the cost of processing cash, where you've got to bring in the old notes, and these have got to be processed so that you withdraw the old notes and the dirty notes from the system as well, given the way we tend to use cash, when we use them for payments. There's also the cost of vault management, when cash is being used. And then there's a cost to destroying these notes as well. So there are also a lot of vices that we see when it comes to the use of cash. A lot of them are very negative. And those are the things that brought about the cashless policy. One of the things that the cash does is encourages money laundering, where you're unable to trace the origin of cash, because cash is faceless. I can take a large sum of money and use it illegitimately and launder funds in that way. It also allows for leakages when it comes to government revenue. And there's always been this issue about government not generating enough revenue. So when you deal in cash a lot, there's a lot of leakages around there. There's also inefficiencies in management, cash management. Now you have a number of companies that have branches all over the place. And when they collect cash, it's not yet in the bank. So as a treasurer for that company organization, I don't have a full view of my revenue, the total revenue that I have, or the income, or what I can use in terms of managing my portfolio. So I might be borrowing from the bank when I don't need to borrow, when I've got cash or funds sitting down somewhere else in form of cash. The high cost of cash handling, I've talked about it in terms of the value chain. When you look at the cash in transit, cash processing, the cost of destruction of these old notes as well. One other major thing that has also affected, that we've also seen from outside from the CBN, is because there's a lot of cash in use and outside of the banking system, it does not allow for the effectiveness of some of the monetary policy pronouncements from the CBN. And I think that was one of the major reasons that accounted for the cash redesign, or the Naira redesign that was announced in November last year for about 90 days. Another negative vice that you see when it comes to using cash is, you're susceptible to robbery when you're carrying cash all over the place. And also, we've also seen one of the major vices that we have in the country at the moment, when you talk about insecurity, has been kidnapping. And how do they deal? They all deal in sorry, I think I got signed out there. Can you hear me now?
Yes, sir. I can hear you, sir.
Okay, all right. So I was talking about the other vice, which is also kidnapping, and that allows for the use of cash a lot. So those are some of the negative vices that we've seen, and that's why we've been pushing over the years for the adoption of cashless transaction in Nigeria. My next slide is just taking us through a journey of the cashless policy. Like I said, this cashless policy is not new. It started way back in 2011, and then the implementation started in 2012 with Lagos, and 5 other states and the FCT were added sometime in 2013.
Sorry, Mr. Kunle, we can't see your screen again. You stopped sharing.
Oh, no, okay, sorry.
Thank you, sir. So,
okay, all right, thank you. So I've just taken us through the journey of the cashless policy so far. This was first announced in 2011. The implementation started in 2012 in Lagos, like I said. 2013, 5 new states, 5 other states, including the FCT, were added to it. And in 2014, the cashless policy was actually suspended. And it was suspended largely because we wanted to deal with financial inclusion, try to address the issue of the unbanked. And that was why it was suspended, so that we could use some other channels to try and get the number of the unbanked within the financial system. And that was why it was suspended for about 5 years until 2019, when it was reintroduced, and the policy was introduced in those 6 states and the FCT that we started with. In fact, I'll talk about some of the key things in terms of what the policy was. Some of the features of the policies at the time that it was introduced. And then 2022 was more like the enhanced version of the cashless policy, where there were a number of challenges, especially when it was going alongside side by side with the Naira redesign. So what has always been the features of the cashless policy? Now, the features have changed over the years. We're just going to talk about what it is right now, the enhanced cashless policy. Now, in terms of threshold, the current threshold is that for cash withdrawal above 500,000 per week, it's not that you're not allowed to do it, but when you do it, there is a charge. There's a charge on the excess cash withdrawal across all channels, so not just from over the counter, whether you've done it online, over the counter, or when you've done it over the counter or via the ATM. There's an excess charge of 3% on cash withdrawal for individuals when it's over 500,000 per week, and for corporate, 5 million per week. That's the threshold. So you get charged that amount just over the threshold. Now, there's also room for corporate. There are some large corporates that at some point they might need to withdraw much more than the 5 million per week. But there's a requirement that yes, that would be allowed, but there are certain things that the bank must also do, and those are listed. Collective valid means of ID, BVN of the directors and the team of the company involved. Then one of the things that we insist that the bank must also do is that when we go for examination, we want to see that withdrawal has been approved by the by the MD or CEO of that financial institution. What we don't want to see is anyone doing it, but we want the CEO to be aware and to be the one that is authorizing that that company can go ahead and withdraw above that limit. Now, other features of the enhanced cash policy include the fact that third-party checks, I think when we started, you couldn't cash above, was it 50,000 naira over the counter, but that's been increased to 100,000 now. And then the extant limit of 10 million on clearing checks is succeed. So we don't expect to see checks of more than 10 million going through clearing. Why we were trying to, one of the things that was done doing the Naira redesign, because the intention was to try and reduce the amount of cash in circulation, the threshold on charges on deposit was suspended by the CBN in order to try and mop up the old notes. The intention was to mop up the old notes and replace them with the new notes. I think there was also a preconception in the market then that the Naira redesign wasn't an exchange of one for one. It's always been to try and ensure that the cash that was operating outside of the system in the unstructured market was back within the financial system, so that the effects of a monetary policy can be felt properly, rather than where we were not seeing the intended effects of the monetary policy pronouncement by the CBN. Now, what do we see as the benefits of the cashless policy? From our perspective, there are various layers of benefit that we see. For the government side, we expect to optimize tax collection because transactions are now online and they are more visible than cash, which is largely faceless. You also expect to see that because transactions are done electronically and you can see them online, it also helps to increase economic growth and also encourages financial inclusion. From the consumer perspective, we see that it enhances, it enables faster and easier payment. A number of us cannot do, I can't go without my mobile phone because that's where all my transactions are done. And that's what we see for a number of people. You can do your transactions online in the comfort of your home without having to go to the bank or worry about, oh, I've got to get to the bank because they're going to close at 4, they're going to close their gates at 4. I can do a lot of my transactions sitting in the comfort of my home or my office. There's also the reduced risk of robbery because I'm not carrying around cash, so I'm not worried about someone attacking me and then taking off the resources of my hand. For corporations as well, you expect better access to capital, due to shorter payment processing time. So as a corporate institution, I sell my product, someone pays me online, electronically, I get value almost immediately. Rather than paying me with cash, I've got to wait, do a mop-up of cash, and then take that to the bank for it to be credited before I can make use of it. So that delayed time of being able to use my cash is completely cut out. It also helps to reduce revenue leakages within those corporations. And there's more efficiency in the treasury management because I can have locations all over the country where I do my business. But because my payment is largely electronic payment, I can harness and see all my collections almost immediately. And from the banks as well, you tend to see efficiency to their payment, electronic payment processing. Now, in the last couple of months, we've all faced challenges with trying to make payments online, or you go to a POS and it's completed, it's failed. Those are some of the teaching challenges that you expect to find when you decide to roll out for the cashless policy immediately. But one of the things that we've also charged the banks and the financial institutions and the payment solution providers to also do is that many of them are now upgrading their system and improving their payment infrastructure. So without that, our payment infrastructure will not get to the level that we want to get it into. And that's when you start That's what you start seeing. Now, there's also the benefit when you look at from the credit perspective. I'll come to benefit when you look at credit perspective, but this is just the impact of the cashless policy over the year. When we suspended the cashless policy in 2014, we've seen a growth in financial inclusion from 44% to 63% as of 2020. I don't have the latest data, so I'm using 2020. The volume of transactions that are also being done electronically now has gone up astronomically. You can see from 2012, where we had 45.6 million volume of e-transactions that were being done electronically. As of 2020, that was more than 1.4 trillion. And then you've also seen a reduction in cash utilization from 22.4 trillion as of 2012 to 8.4 as of 2020. So the impact has been following the trajectory that we want to get into, but we're not yet there. And that's why the decision to enhance the cashless policy was taken to run alongside the Naira redesign that was announced in November 2022. And we talked about some of the impact, improved efficiency in our payments, the payment system. We're not there yet, but we're working with our payment solution providers to also improve the payment gateway and the payment platform that they got, so that they can cope with the increased volume that has been pushed towards that direction. There's also increased cost saving, because the less we use cash, the more that we save in terms of cost. And that has been attested to by some of the state government that we started with. Lagos State says that they've saved over 40 billion in terms of cash admin between 2012 and 2019. We've also seen improved transparency and accountability, because cash is prone to fraud. But when you do electronic transaction, there's always an electronic trail that you leave behind. So that can always be traced to find the pain point and deal with the pain points almost immediately. So what benefit do we see in terms of credit allocation? We talked about increased transparency and accountability. It offers better visibility into borrowers' credit history as well. One of the key things that you will see in our economy is the fact that we have a lot of unbanked people who have not taken credit before. Now, when they come to credit bureaus like First Central and they do a credit check on them, there would not be, I'm not sure they will have any. They'll come up with zero credit score, more or less. I don't know how First Credit has configured their system. But when you have electronic transaction, there are a number of points that credit bureaus can now use to try and design credit score for those individuals. So for me, for instance, I'll talk about two of them. One of the things I've noticed lately is when I pay my electricity bill online, even if I'm renting the place, I tend to see that it's my name that is showing on that receipt. As you might also have the landlord's name there, but it shows that I've made that payment. Now, that can be a data point for a credit bureau to now start saying, I want to understand the credit behavior of a customer, because you're paying your NEPA bills on time. I want to understand your I want to have a behavioral data point for, okay, how much do you load as credit on your mobile phone on a regular basis? And that can help them to develop data points that they can use to develop credit scoring. So that when a bank goes to the credit bureau and says, do you have a credit score for this customer? They can actually bring the credit score for a customer that has not borrowed before. Those are some of the benefits that you get from cashless policy. And that's just looking at one of the C's of the 5 C's of credit in terms of ability of that person to repay a facility that you've lent to that person. And unless we create those data points, credit bureaus like First Central would not be able to properly articulate and say this person borrowing borrowing behavior, it's at this level. So we believe you can lend this amount of money to them. When you go to the bank, what the bank will simply say to you is that you have no credit score, I'm unable to lend to you. Another benefit, I've mentioned this before, is all about improved financial inclusion. We've seen the level of, we've seen an increase in the number of people that we have brought into the system, but there's still a long way to go. And that's why we'll continue to push the cashless policy. The reduced cost of cash management is also, it's also one. Now, when you're able to reduce that, for the banks themselves, it also helps them to reduce their cost of loan origination. So when their cost goes down, then the rate that they're also putting out in order to lend, we also expect that to start coming down as well. Increased speed and convenience of payments. Once everybody is able to transit to doing a lot of electronic banking, you might also find that when you want to originate loan, you don't need to go to the bank. The bank have already profiled you, and they will go to say that, oh, okay, for you, given what we know about you, we can actually lend you 100,000 naira, 500,000 naira, and you can do that sitting in your house, on your phone, or on the internet, without having to go, because they've already profiled, they profiled you electronically, they know they have an history, they know to get a credit score for you, and they can do that. The other thing that we see is improved risk management. Because of the digital trade, the electronic payment, it helps to improve risk management. I talked about it in terms of being able to eliminate fraud, and the fact that that is also a cost to the banks or financial institutions when they lend. So all of this helps them to reduce their cost of lending. And electronic payment channels provide a better customer experience for everyone. That is what I've seen. That is what I tend to use a lot. Like I said, I can't do with my mobile phone because most of my transactions are done on the mobile phone now. I sometimes dread going to the branch because I know I don't need to go to the branch because I can do my transactions, sitting in my home or in my office. So in conclusion, we'll say that the impact of the cashless policy has been significant on the Nigerian economy. We're not where we want to be. We're still going there. We've seen improvement in financial inclusion, improvement in payment efficiency. That is bound to improve further, and also with reduction in the cost of cash. The policy, like I said, is expected to also help in terms of efficiency in credit allocation because a lot of things can be done transparently. There's accountability. It also expands the pool of potential borrowers that banks or financial institutions can lend to. We as policymakers and financial institutions, what we simply say is that we keep encouraging everyone to leverage the benefits of cashless policy so that we can also drive financial inclusion and continue to promote economic growth in Nigeria. So once again, thanks everyone for listening.
Wow. Thank you so much, Mr. Adekunle, for this wonderful presentation. I really learned a lot. You did mention that cashless do not mean elimination of cash from the economy, and rather it is for reduction of cash in circulation and also to encourage the benefits, to encourage e-channel transaction. Thank you. You also stated that the policy started since 2012. That's over a decade. Thank you so much. And you also encouraged the financial institution and how to leverage on the services of the credit bureau before originating any loan. But I've jotted a lot. Thank you so much, sir. I really enjoyed your presentation. Ladies and gentlemen, I hope we are getting value from this webinar.
Well, my connection is bad, so I don't know whether you asked me a question.
Yes, we will ask you a question towards the end of this webinar because I've seen so many questions coming in already from our lovely participants. So we'll attend to the questions at the end of the section. So let's move straight to the second speaker. Mr. Bass, can you help me project the profile of the second speaker? Okay, I think I'm there. Okay, our second speaker for this great event is the President, FinTech Association of Nigeria, in the person of Mr. Ade Bajomo. Mr. Ade Bajomo has extensive experience in information technology and operation. He has held several leadership positions, including Executive Director at Access Bank PLC and Chairman at Access Bank PLC Kenya. Additionally, Mr. Ade is a member of Global Technology Advisory Board at MasterCard, a chartered member of British Computer Society, and a member of Institute of Directors. His passion for fintech led him to serve as President of FinTech Association Nigeria, as well as chairman of the FinTech Roadmap Committee at SEC Nigeria. He will be throwing more light on the theme, the cashless policy in Nigeria, the impact on credit allocation and its effect on fintech and credit space. Let's welcome Mr. Ade for his presentation. Over to you, Mr. Ade.
Thank you very much, Mary. And it's a real pleasure to be here, distinguished ladies and gentlemen. Firstly, let me thank the leadership of First Central Credit Bureau Limited, and of course, the MD CEO, Oladimedi Peters, for putting such an apt webinar together. I'm extremely delighted on the topic of harnessing the benefits of cashless policy on credit allocation, especially in a nation such as Nigeria. You know, as we all know, cashless policy refers to the promotion of electronic transactions and the reduction of cash transactions, as Mr. Adekunle has rightly articulated. You know, it has several benefits, as again is articulated, you know, convenience, speed, transparency, security, customer experience, amongst others. However, one of the most significant benefits of cashless policy is the impact it has on credit allocation in developing countries. The lack of credit is a significant barrier to economic growth and development. So whether you're an SME, a small or medium-sized business, or a micro business, or indeed an individual, you know, a lot face significant challenges accessing credit due to inadequate collateral and a lack of credit history. And the cashless policy has huge potential in alleviating this. Just to share some data in terms of access and the obstacles that SMEs are facing from the World Bank. So about 90% of MSMEs and approximately 70% of business, create 70% of businesses worldwide. 600 million jobs will be needed by 2030 to absorb the growing workforce, which will make development of MSMEs a high priority for many governments. And of course, the current credit supply is 3.7 million against one of about $5.2 trillion required every year for MSMEs. So the impact of SMEs is very, very important in a developing country like ours, because many of those businesses are micros as well. So going cashless creates that digital trail that you've heard earlier on that can be used to build credit histories for individuals and firms. By using electronic transactions, those digital records of sales, purchases can be created. And then all sorts of algorithms come from that. You start leveraging AI and better insights to now start creating better credit profiles, how much to allocate, how do you manage your risk. Secondly, you know, cashless policy reduces the cost of credit assessment, you know, for institutions. And in traditional banking, this is a big cost. In terms of a lack of credit history and also a lack of collateral. And the digital trail that is created by financial institutions use these analytics to assess credit worthiness, reduce the cost of credit assessment. And of course, First Central have a first stand experience in the benefits of this and in the potential it plays in driving broader economic development. And thirdly, a cashless policy promotes financial inclusion, which is extremely key in a developing country, because if we can bring more and more people to be financially included, then we will fail in actually growing our economy quite significantly as well. And what we're trying to do, the policy is not anything new. There's several countries in the world that have actually driven this and have seen huge benefits from it, largely from the Scandinavian countries, really. So you take Sweden, which is one of the world's most cashless societies. Cash accounts for only just 1% of the country's GDP. You take Norway, another country that's made huge progress in terms of cashless, and again, the use of cash declining for many years, with most transactions conducted via debit cards, credit cards, and mobile payments. We all know of the strides that China is making in digital payments, central bank digital currencies, Alipay, WeChat Pay, processing trillions of dollars of transactions every year. I mean, South Korea, again, has one of the highest credit card usage in the world. Most transactions, again, done via cards and mobile payments. And of course, United Kingdom, which is one of the leading countries when it comes to fintech regulation, fintech innovation, cashless, and all the things to go with that. But we can't complete that without talking about our great country, Nigeria, as well. And we've made huge progress, there's no question about it, albeit with challenges. But those challenges create opportunities, and those opportunities hopefully would attract economic value to those who are able to resolve those challenges effectively. So what is worth noting, of course, is that the countries that have made this significant progress did not do so without their own challenges as well. And some of those key challenges include infrastructure. To go cashless, as we've seen, you need the infrastructure to be in place. It needs to be scalable. It needs to be secure. It needs to be accessible. It needs to be 24/7. And there's no question about it that, you will see more investments in driving that infrastructure to the levels required to support cashless societies. You need access, because while digital payments options have become very popular, there are still many people who do not have access to these services. And it's not just a Nigerian thing, it's a global thing. So the whole concept about digital inclusion, making sure that it's not just the 5% who can afford more than $10 a day or can buy airtime or data, can afford or gain access into the digital world. So that issue needs to be obviously addressed as well. Security, we cannot overemphasize security. Risk of cyber fraud, data breaches, impersonation. But there's, of course, the normal human factors as well, resistance to change. Some people just don't want to change. Yeah, it doesn't matter, convenience and all of that stuff, and cost. So overall, transitioning to a cashless society obviously requires a lot more careful planning, a lot more education, but it actually is also extremely rewarding when it's gotten right, both for individuals and the societies alike, for all of those good reasons that Mr. Adekunle has highlighted earlier on. I won't bother repeating really. However, let's go beyond cashless. And going beyond cashless, there are several emerging technologies that are evolving as well. I mean, you hear a lot about open banking. Extremely pleased that central bank is taking a leadership role, certainly in Africa, in driving this as well. A concept that allows both individuals and businesses, to share their financial data in a secure manner, in an organized manner with third parties, and then create more products, which are very competitive and makes it easier for people to access all sorts of financial products, including credit, of course. We all know a lot about blockchain technology, which is driving decentralized financial services, but it's also going to drive decentralized lending solutions as well. I mentioned artificial intelligence. A lot of firms have already advanced several years now to automate credit scoring, risk assessment, enabling them to make more informed decisions almost in real time, and also assess who's going to default and actually take proactive actions before that default happens, really. Peer-to-peer lending, giving alternatives, and of course, mobile banking, which is giving instant access to and convenience to people who need to access credit. So overall, these emerging trends and technologies have the potential to transform the financial services industry and improve access to credit. In conclusion, a cashless policy has the potential to revolutionize credit allocation in developing nations. And by creating a digital trail, reducing the cost of credit assessment, providing greater transparency, making it easier to assess credit worthiness, improving credit scoring, speeding up loan processing, risk management, promoting financial inclusion. All of these can enable both individuals and MSMEs to access credit, drive economic growth, improve the standard of living and development. And the role of credit bureaus and indeed First Central becomes so fundamental in driving this. As policymakers, financial institutions, and operators, we must continue to work together to harness the benefits and promote credit allocation in our great country. Thank you very much and have a fantastic day. Thank you, mate.
Wow. Thank you so much, sir. Thank you for this wonderful presentation, sir. We really appreciate you, sir. So to the FinTech family, cashless means promotion of electronic transaction against cash transactions. He did also highlight some of the benefits, which are convenience, speed, security, as well as improved credit allocation. Thank you once again, sir. I really appreciate you, sir. Thank you, sir. So let's move down to the third speaker of today's event. Mr. Bass, can you just project again? Sorry. Okay, so I've seen his. I can project, but I've seen his so far. Okay, our third speaker is the head personal banking in First Bank of Nigeria, in the person of Mr. Ikemefula Nwachukwu. Mr. Ikemefula Nwachukwu is the head of personal banking in First Bank of Nigeria, PLC. In a banking experience spanning over 21 years, he had worked in several leadership capacities in service, retail, commercial, and public sector. Mr. Nwachukwu is a fellow of the Institute of Credit Administration and a fellow of Certified Institute of Finance and Control of Nigeria. He is a member of so many other professional associations I can't start calling for what I can see for his profile. So he will be speaking to us from the point of commercial bank leveraging on digital lending. Over to you, Mr. Nwachukwu. Thank you, sir.
Thank you very much, Mary. As well appreciated. And let me also seize the opportunity, like my colleagues, to thank the MD of your company for creating this opportunity, this forum for us to interact, and especially in this very important topic of harnessing the benefits of cashless policy, especially as it concerns commercial banks. We're talking about credit allocation. And I would say I've been specially blessed by having the first two people that spoke before me, because indeed they did a very good job in touching on the issues and then the points I want to highlight in the course of this presentation. So just confirm that you can see my slide, Mary.
Yes, sir. I can see your screen.
Okay, we'll say it's harnessing the benefits of cashless policy, commercial banks leveraging it for digital lending. So I will not bore us by going through each of the slides one by one, but I'll just touch on a few points. Don't get bored if I touch on points that have been mentioned before. You just lay the background and foundation for my own presentation. So we know how important the financial sector of every nation is in its economic growth and development. And we also know the very critical role that the central bank of the country plays especially when it comes to monetary policies. And the cashless policy indeed is one of the levers that the central bank has to pull to manage the monetary policy, especially when it comes to the supply of money in the economy. Yes, it's been highlighted the benefits of the cashless policy, reduction of costs of cash handling for banks. That is very important. If you check what to spend in managing cash and handling cash before the cashless policy and what we spend today, I assure you that it is a very great plus for the banks. Checking of crime and corruption, we know what happens just towards the elections, and then how vote buying was a topical issue, and the intent of the cashless policy to curb that. We also know that the financial institutions in every country must leverage such policies as the cashless policy to entrench credit penetration and help the economy to thrive. Just a snippet of where we were before the cashless policy was implemented in 2012. Total volume of cash in circulation, total transactions carried out in cash in percentage was 85%. About 14% was in check, and only 1% was in mobile or web, and almost zero on the POS terminals. So fast forward 10 years after, in 2022, precisely in October, we now have about 1.6 million POS terminals. We have about 1.4 million agents. We also have about 14,000 automated teller machines. And this is also being fueled by mobile subscription penetration across the country. We also have the QR code and then the mobile money wallet adoption. In fact, NIP stated that about 183 million transactions were carried out on mobile money wallets transfers between just in the month of February 2023. To also help us appreciate further the impact of cashless policy, if you look at this particular slide, you will see POS transactions in 2012, and then you see POS transactions in 2022. We are at over 6 trillion. And electronic transfers, we're at over 318 trillion, coming from below just about 6 trillion in 2012. So the cashless policy, as I said, the benefits have been highlighted and re-echoed, but I'll focus on the last one, which is access to credit. How indeed does cashless impact access to credit? And then the second to the last, which is greater financial inclusion. So how does this happen, and how can commercial banks leverage this? And this slide speaks to a couple of big data. You'll see KYC, you'll see the bank, you'll see artificial intelligence, and closely following that will be machine learning. So in the era of big data, we've been told again and again that data is the new oil. So if you're looking for how to make money today, the best place to make money will be through data monetization. And that's why we are particularly glad about the regulator, the central bank, coming up with the open banking framework that will enable players in the industry to leverage their data sets to make money. So we'll go back to digital lending or access to credit because of cashless policy. So data again, very critical. So the impact the cashless policy have had is entrenching digitization. And when you have digitization, you are able to collect more information about the customer. Customer has a digital footprint. The better understanding of the customer enables you. And I love the way Mr. Bajomo put it out there. The digital footprint of the customer enables us to credit score the customer using more information than was available before. And when we credit score this customer almost instantaneously, we're able to grant the customer credit. Today, banks as well as fintechs are doing a lot in the nano and micro lending space because of the availability of data. So data is very crucial. As you bring more customers or more players or more participants into the financial transaction net, what you do is that you begin to improve the KYC that is existing in the whole economy. And when you improve the KYC and you have information from the credit bureaus like First Central, and you marry this, then you're able to make better credit decisions on the fly. And when you make this decision, the customer is happier for it, the bank is happier for it, and the economy is also happier for it. So let us see what the journey was before the advent of cashless and then digital lending. This is just a pictorial as well. On the traditional space, we had a customer having to at least get through 5 touch points, having to do multiple visits to the branch, having to submit an application for a loan, coming back to the branch again when the loan is approved to sign off an offer letter, and perhaps wait for weeks and sometimes even months for disbursement. But today, within 1 minute, the application is received via mobile or even through the USSD channel. And then underwriting is done instantaneously leveraging artificial intelligence and machine learning. And then loan gets approved and then funds are disbursed instantaneously. Today, we have a product in First Bank that this entire process takes place in just about 30 seconds. Within 30 seconds or max less than 1 minute, the applicant requests the underwriting and then disbursal of funds happened. So that shows how important cashless is when it comes to credit creation. Cashless has helped us increase access to credit for individuals and small businesses, just as was highlighted. It's also led to low operating costs. It's improved the risk management framework. Because again, when you have data of customers, you're able to do better data analytics. You're able to improve your insights on the customer. You're able to better manage the customer. In fact, predictive analytics enables you to even be able to project the probability of what we call propensity of the customer to repay the loan. You're also able to foresee ahead of time and take proactive steps if the customer is likely to default. You begin to do restructuring even before the loan goes bad. Or you begin to engage the customer, leveraging multiple channels and interfaces of engagement, just to continue to remind the customer of his indebtedness and prompt him to pay, because we have seen that many customers actually do not repay their loans, not because they will not want to repay, but sometimes out of forgetfulness or just out of conflicting needs. But when you remind these customers, leveraging electronic means, the customers are quick to repay their loans and request further. When you also remind them, they are able to understand, when you educate them, they're able to understand that repayment enables them to take another loan. Repayments make their credit score better. Repayments ensure that they are not blacklisted by the credit bureau. And repayment help them to create a credit history that will enable them to access even better credits in the future. Again, decision making is quicker. As I said, loan underwriting today takes just 30 seconds. It's on the fly. So this is what cashless policy married with digital lending has done for us. Origination, disbursal, collections of credits are done using non-traditional channels. We're using USSD, we're using mobile app, we're even doing on the web. We're layering on the ATM machines that customer can walk up to the ATM and make requests for credit and get it disbursed to him. And then leveraging technologies, advancement in internet-based APIs, cloud computing, smartphones, and digital currencies are also helping. These are things that wouldn't have been possible if cashless policy was not promoted by the regulator. There are also multiple digital business models to meet varying customer needs today. We do such things as peer-to-peer lending, e-commerce and social platform lending, especially when you talk about embedded finance, where you look at things like buy now, pay later, look at supply chain funding, online lending, and all that. These are happening and are made possible because we have a cashless policy that's driving many more participants and players in the industry into the financial inclusions net. And when they come into the nest, we are able to have information about them, leveraging the digital footprint they've created through their journey, and we're able to risk profile them, score them, make eligible make offers to them about their eligibility to get loans. Today, people are able to make proactive offers to customers to take loans based on the understanding of these customers, based on their transactional history and behaviors. We leverage what we call both primary and secondary data sets in doing this. Our primary data set purely leveraging on your transactional history, and secondary data set looking at your behaviors, which you can glean out from your social media interactions and all that. These are helping banks today to further entrench digital lending. Mary, please confirm that you can hear me.
Very clearly, sir.
Thank you very much. So we just look at the benefits of the digital lending, as I've said. We have enhanced customer experience. As I said before now, customer wait for weeks or even months to get credit approval, having to make repeated trips to and from the branches of banks. But today, that has changed drastically. Customer only have to just sit in the comfort of his home, dial a USSD string, or log onto his mobile, and he's able to access a loan. That again has led to reduced costs because the banks, as it were, have cut out the costs of labor. You don't need as many people. I'm not saying that we are sacking anyone, though. I know the CBN is here. We are not sacking anyone. We are simply just realigning our workforce. So cost has been reduced, paperwork eliminated. So indeed, it's a win-win for both the customer and the bank because the CBN has created the cashless we can leverage to serve. There's improved risk management, as we have said. Scoring, collection, underwriting is done with detailed data analysis. So a better understanding of the customer journey, better understanding of who the customer is, better understanding of the kind of product to offer the customer, better understanding of the collections approach to take to retrieve the monies from the customer. This is creating a new business model for both the bank and the customer, and is fueling the growth of the economy as a whole. So this is not to say that there are no challenges to digital lending. Mr. Bachum also talked about data security. Today, there has been that debate about who exactly owns the data. Is it the customer? Is it the bank? Or is it even the telco? So who is there? There's the debate and the argument about who really owns the customer. So data security becomes important. And the NDPR regulation is well documented. So the customer's data has to be treated with utmost secrecy. And then usage of customers' data is also very sensitive and requires customers' consent before that is done. And that is also what we are doing today. We also know that there is the aspect of regulatory compliance. Fortunately for us, if you're playing in digital lending space, we still do not have a regulatory framework around digital lending today. This is because when you look at digital lending, it is quite at variance with what the prudential guidelines try to communicate, because digital lending really is short-term lending and is high-velocity lending. It is not, the prudential guideline has not peered into or has not taken into account the advent of digital lending and provided regulations to guide it. So I also think that this is one of the aspects of the benefits of the cashless policy that the regulator, the central bank, will have to look at critically. We are thankful to the CBN again for bringing out the GSI solution, which has also helped banks to play and fintechs alike to play actively in the digital lending space, because without the GSI, it becomes very difficult for you to be chasing people who have taken loans in nano sums to come and repay. The cost of recovery would have been so high, especially for micro and nano loans, were it not to be for the GSI solution that the CBN has put in place. There's also the challenge of integration to legacy systems, which exist in the traditional banks. The fintechs don't have this problem, but they also have their own problems. Their challenges are also there. There's also the cost of acquiring new digital solutions, building new technology infrastructure. And then there is high cost of product marketing, because again, for digital lending, you do not need people to walk to the customer's house to engage in physical interactions most times. You need to just engage the customer through the same channels that the customer can onboard and access the credit facility. So how can commercial banks then leverage digital lending? We've talked about how digital footprints, data, big data has helped us in better understanding of the customer, and that is helping us in profiling the customer, having an enhanced or increased KYC of the customer. That's knowing our customer better and knowing our customer's businesses better, have helped us to be able to properly segment the customers and then be able to personalize our offerings to them. There is the automation of underwriting. Underwriting engines are everywhere in the market today if you want to get off the shelf, or you can also build your own, but the automation is on the increase and many more players are jumping into the fray because of the perceived high yield of the digital loans and then their short tenured nature. There's also the credit advisory, the role played by the likes of the credit bureaus, like First Central, which we are working actively with in our digital lending journey. Then credit monitoring, as I stated, has been enhanced because you can predict customers' propensity to repay. You can predict the likelihood of customer to default, and then you take the necessary actions to forestall that. Then seamless disbursement. Underwriting, disbursement, collection is seamless, is end-to-end automated. So banks are saving a lot of costs in doing this, while at the same time reaching many more customers. Just to help us differentiate or see the difference that digital can make when compared to traditional. So around two loan products offered to the same segment of customers in First Bank today. And if I do a comparative analysis of the loan offerings to these salary customers in the last 3 years, just look at what the growth, what the numbers are saying. In count, I've witnessed 127 growth in digital lending, digital loans, while I have witnessed just a paltry 4.7% growth in the traditional loans to the same segment of customers. Please underline that. And in terms of disbursements as well, I have seen 96% growth in digital loans, why I have also seen a paltry 1.5% growth in the traditional loans within the same period. And when you look at revenues, I have seen a 162% jump in digital loans revenue and a 78% growth in traditional loans revenue. So just over and above everything we've talked about, you can see the importance of digital lending. And as I said and have re-emphasized, it will never have been possible for us to be active in this space were it not for the many more people that the cashless policy has forced into the banking nest. And it helped us to understand them better, understand their journey better, and be able to create profile for them, make them eligible for loans, and then offer them the loans at the comfort of their convenience. Again, traditional banking is quick fading away. Bank branches will continue to be there, but they may cease to be what they are today. What we will see happen is that digital banking will dominate the space in the coming few months and years. The regulations are out there. Nobody knew that CBN would be quick to jump into the open banking framework that was just released in the course of. So that forward, when it comes to cashless policy, and that this cashless policy will enable us as commercial banks to grow, nurture, and entrench digital lending across all segments of customers. So what I will say is that, again, the CBN, well done. Thank you very much for what you're doing in entrenching cashless policy. We appreciate that. Let me appeal again that we may need to look at or find a way to tweak the prudential guideline to include the digital loans so that we're able to have a framework governing this. Mary, I'll be poised to take questions and comment at this point. And I know you say at the end of this webinar. Thank you very much, everyone.
Wow. Thank you so much, sir. I'm speechless, honestly. I thank you so much because I've learned a lot. You did say that data is now the big oil of this present age, and it's very crucial. Thank you, Dad. Thank you so much for giving us what I call an all-inclusive presentation on this topic, highlighting both the benefits, the challenges, and the appropriate recommendations and solutions and the likes. Thank you so much. We did enjoy your presentation, sir. Thank you, sir. Okay, let's quickly have our last speaker, but definitely not the least for today's event. Our last speaker for today's program is the National President of the National Association of Microfinance Banks, in the person of Mr. Joshua Okute. He is the National President of National Association of Microfinance Banks. His work experience spans over 23 years, cutting across microfinance, retail, corporate, and mortgage banking. He is a certified microfinance expert from Frankfurt School of Finance and Management. He is also a fellow of the Institute of Management Consultants and so many other financial associations. Trust me, his profile is too vast. I can't go into reading all that. So he will be addressing microfinance banks embracing the cashless policy as a tool for financial inclusion. Over to you, Mr. Joshua.
Yeah, thank you. Thank you. Good afternoon, Mary. Thank you. My sincere appreciation goes to management of First Central Credit Bureau and the speaker that has spoken earlier. I do not take this opportunity for granted. Thank you. And thank you for this investment in the subsector. We really truly appreciate. Okay, so do I present from here?
Yes, sir.
Okay. Okay, please confirm if you can. Can you see my screen?
Yes, sir, we can see your screen.
Okay, thank you. So I'll be speaking on the microfinance banks embracing cashless policy as a tool for financial inclusion. Yes, the speakers have spoken earlier. They've spoken well about the origin of cashless policy. Who else could have done that? But the initiators of the cashless policies themselves, that's the central bank. And I know they took us through when the policy first came out to the suspension and now to the cashless policy, and they redesigned Naira notes regime that we have currently. And so that's good. And it's also lovely to hear some of the statistics and the opportunities that the chairman of FinTech Nigeria, Mr. Bajomo, reeled out with respect to cashless, how all these clients have addressed and how their cashless and policies. And we can also see from the last speaker the opportunities and the growth in digital loans from the First Bank experience. So today I'll be speaking to my colleagues, microfinance banks. How do we embrace this cashless policy? This is coming on the heels of the very turbulent time we had in the last three months, where the microfinance sector were really starved of cash. There was no cover anywhere. And that period is something that we don't wish to remember again. But the truth is, from every crisis, we must learn how to innovate and how to be ingenious to manage the crisis. And I think the lessons on that, they're not lost or not. So how do we embrace this position that we have found ourselves as a tool for financial inclusion? So I'll be looking at what the cashless policy and the financial inclusion, and we'll draw a nexus between them, and we'll see the opportunities there, that are available for microfinance banks to launch them. Okay, so the cashless policy regime started. I'll just talk about the most recent one. December 2022, December 21st, CBN came out with a redesigned policy and cash withdrawal limit, and I think CBN has already addressed this. And what did that circular contain? I pegged minimum cash withdrawal limits on individuals to 500, on corporates to 5 million. It also pegged the OTC, where the counter withdrawals, third party to 100,000 maximum, and brought about withdrawal charges of 3% and 5% over this minimum for both the individuals and the corporate. And one of that that they brought about is, with the CBN mentioned, which we see as a very, very stringent approval process and requirement. Because if for you to withdraw above the limit, you need a managing director to sign off. I'm just imagining for my friend and brother in First Bank, how many of such approvals with the First Bank MD signs off. Even the microfinance bank, even the unit microfinance bank, how many will you sign off? So for us as microfinance banks, we don't think this is an option that that want to look at, that stringent approval process. And also in that letter, it gives special recognition to bank agents and mobile money agents in enabling access to financial services in underserved and rural areas. Let me do some house check. Mary, can you hear me, please?
Yes, we can, sir.
Okay, thank you. So this is just a summary of the current cashless regime that we are running. And what are the implications of this? Implications of these are that, one, there is definitely less cash transactions, as other speakers have said, that move from cash transactions, move to alternative channels usage. So as microfinance bank, we start telling ourselves that, look, I know some of us have started this even before this time, but this last experience gave another version of the story that, look, it is either you innovate or you die. So move from cash transactions to alternative cash usage. And also the issue of financial literacy has come to the fore, because as microfinance banks, we have most of our customers in the past have always understood the fact that their transactions with us should be on a cash basis. I give you cash, you give me cash. I don't give you cash and you're giving me something. So we need to start, to train our members on financial literacy for them to understand what this is. And this also has brought out a lot of opportunities on partnerships. So for microfinance banks that are trying to innovate, that want to get alternative channels, the need for partnerships has come to the fore. So the question is, who do I partner with? What do I need from alternative channels? Who do I go to? Can I go alone? Can I do this investment alone? Do I need to partner? Do I need to share? Do I need to go into any shared service with anybody? And another implication of this is that there must be investment in digital financial services. Because if you say there's less cash, then you're saying that there must be more of digital financial services. So microfinance banks have started, saying how can we bring investment in the area of DFS, either from equity, from shareholders, or from debt. You have to invest in this, and this has also brought another application of this cashless policy is the new risk, the cyber risk, cyber security risk. And recently, last year, the central bank came out with a cyber security framework that every institution, every OFI must adhere to. So these are some of the issues, implications of this cashless policy that we are on now. And the Apex Bank, I've also explained that the cashless policy is aimed at scaling up financial inclusion and reducing the cases of armed robbery. Yeah, I think I was listening to a speaker and I was just wondering, I think it was the central bank when I said that sometimes the cashless policy was suspended so that to give rise or to give room for inclusion, for financial inclusion. Right now, we have seen that even the cashless will or should actually aid financial inclusion. We are not talking about innovation, I think, financial inclusion, and we know what World Bank says financial inclusion is, that where individuals and businesses have access to useful, affordable financial products and services that meet needs. So, and this includes the transactions, this includes payments, savings, credits, and insurance that are delivered in a responsible and in a sustainable way. All over the world, the talk is now on responsible and sustainable finance. Responsible and sustainable finance. So what I'm saying, that financial inclusion is about having all of these services that meet the needs of our own clients. We deliver them in a responsible and in a sustainable way. And the Enhancing Financial Institution, Innovation and Access, EFINA also defines financial inclusion as the provision of broad range of high quality financial products, such as insurance, credit, payments, pensions, that are relevant and appropriate. So if you look at financial inclusion, this can be summarized into what? This can be summarized into one, that broad range financial products. So as microfinance banks, our products, how broad are they? How broad are they? Do we just run with a mono product or with the product that almost everybody in the industry have? Two, how relevant and appropriate are these financial products to our target customers or to our target community or to our target market? Three, how affordable? Affordability of this product will improve or will enhance financial inclusion. Four, do we deliver these products that are affordable, that are relevant and appropriate? Do we deliver them in a responsible, in a sustainable manner? So my discussion today aims to talk to our colleagues to say, okay, how can you take advantage of the cashless economy or the cashless policy to develop broad range financial products that will be relevant, that will be appropriate, that will be affordable, and delivered in a responsible, in a sustainable manner. Once we can do this as microfinance banks, we are contributing to enhancing or deepening financial inclusion. So let us just look at some statistics briefly on financial inclusion. Now, again, the 2020 Access to Finance report by EFINA, let's just look at it. I mean, I know we all have this, but let's just look at this again. For assets, the report say there are 106 million adult population. Out of these, 64.1 are financially included. 35.9 represent 38 million are excluded. 53.6 use formal financial services. 14.4 use informal financial services. So that means that some of maybe say every 10 adults in Nigeria as at 2020, 6 of them or so are financially included. Then about 4 are excluded. Out of say every 10 adults, say about 6 or thereabout use formal financial services. So what do you use this information for? Now, 38 million adults are financially excluded. 81% of these financially excluded adults live in rural areas. This is a very interesting statistics looking at the location of the microfinance banks in Nigeria. As at December last year, we have about 894 microfinance banks in this country, and most of them are located in some of these areas. So if we have about 30.8 million live in rural areas, just about 7.3 million live in urban areas. And so again, another interesting statistics again by EFINA is the mobile phone penetration and usage. That of these 38 million that are financially excluded, in fact, I can say that 85% of them have access to mobile phones. 61% own mobile phones, 24% use phones that are owned by others. We put these two together, that there are 85% of 38 million, they have access to they have access and they use mobile phones. This is another interesting statistics. If we are moving from the cashless regime to using alternative channels, if we are trying to improve or deepen financial inclusion, we are looking at those that are excluded. How do we bring them into the net? And it's like we have a ready market there. Also, the financially excluded adults, 25% are saving, 7% are not saving at all. So that means that we have people, we have say about close to 30 million people that have phones that are not included, that out of this, only about 25% of them save on, if in a formal financial institution, 75% of them don't save. Now, in terms of loan, 81% of these are not borrowing at all from financial institutions. So what it means is that 1% of 38 million, if we do credit search on them, the credit search will come back nil because they don't borrow from a formal financial institution, and 90% of them borrow from family and friends. So in product development 101, that we've learned is that the product that you are developing, the first thing you ask yourself is there market for this product? Will it be relevant to the people out there? So the market for this product is that, now is the excluded people, the excluded numbers. So for microfinance banks, we have markets. We have 30.8 million that live in rural areas and all this like. So what are the opportunities? The opportunities there is, one, the high financially excluded population is an opportunity for us. An opportunity that are people that can come to the financial, to the formal financial net. So it's an opportunity for us. So what products, what service can we bring together to bring this in? Second opportunity is the rural dominance, where we have where about 60% of our MFBs are located. So if you have about 30.8 million that live in rural areas, that means that, and most of our areas, about 60% of our MFBs are actually located in the rural areas. So those in the rural areas, or those in the areas that are not, that are not in the urban area, we have the population there to assess their needs, look at what they want, what we think would be relevant and appropriate to them, and we'll come up with such products that will be affordable and will deliver them in a manner that is responsible and sustainable. I tell you, we get one, of course, we make profit, and two, financial inclusion, labor provision also will improve. The third opportunity that we have again is mobile phone penetration. Since we are moving from the cash transaction era to the non-cash transaction era, we have about 85% of the financially excluded people, they use mobile phone. And for digital financial services, the base thing is mobile phone penetration. Mobile phone penetration in this segment of the excluded people is about 85%. So that means that these people are there. Whatever product or service we design for DFS, we have a people that can readily use this. Also, lack of credit access, where just about 90% of them borrow money from family and friends, and 81% are not borrowing. So this is another opportunity that we have as microfinance banks to look at products that will fit, look at credit products that will fit. Also, the savings opportunities are there too. We have just about 7% that are saving. We have high percentage of not saving, about 75%. So as microfinance banks, what next? What next? What next for microfinance banks is, one, environmental assessment. How does this cashless policy affect individuals around us, affect business around us, affect the people around us, affect our immediate community? Affect, the uniqueness of microfinance banks is that we have this spread, and our customers are the customers that their average loan size, average deposit size, average collections or even remittances are lower than what the regular conventional banks will do. Some people say that there's a customer that are too big for microfinance banks, they are too small for a commercial bank. Where are they? Not those ones. But we have those ones that are within our target market. So what we need to do now is to do another assessment of our target market. What are the financial behavior of the excluded around us? So, for example, I'm in an area and there are excluded people there. What are the financial behavior? How do they treat credit? How do they treat savings? How do they treat payments? How do they treat remittances? Are they in places where people will always send money back to them for them to do certain things? They always need to receive money from abroad or from wherever. We need to look at that. And in reviewing this, we will see that there are gaps that exist. So it is those gaps that we will now take, like I said again, in developing some of these services and these products that we need to get to these excluded people. Secondly, we need to embrace DFS, financial services. It is here. There's nothing we can do about it. We need to build capacities around DFS as laudable alternative, because capacities around DFS with respect to, we get partnerships that support DFS. We understand what particular digital financial service or digital financial products or service we are to render. We need to build capacities in this area, go for trainings, meet people, study those that have done it. Then we develop data financial services products. Some of our products that we have, we need to review them. We need to review some of our existing products. Perhaps that is the reason the excluded are not even coming in. So we need to review this product. We need to review our channels of delivery. Then we need to review the opportunities that will enhance inclusion. Then, lastly, we must understand the risk involved. We must develop the right risk management framework for digital financial services. I mean, I wouldn't want to go over the advantages like other speakers before me have mentioned. Advantages of digital financial services: reduce costs, increase outreach, easy accessibility, speed, and the likes. So in summary, for microfinance banks to take advantage of the cashless policy to deepen financial inclusion, we need to understand the the financial behavior of the excluded. The data from EFINA shows that there are opportunities for microfinance banks with the excluded. 30.8 million in rural area, 38 million excluded, 85% or so with mobile phone penetration, 75% opportunities in savings, and almost about 81% opportunities in credit in the excluded area where most microfinance banks are located. I think it's high time we started to work on building capacities in this area. Thank you, Mary.
Thank you so much, sir. I really enjoyed your presentation. Thank you, sir. You actually highlighted a lot of things. One, which is ways that the microfinance bank can leverage the cashless policy for its next level by conducting environmental assessments. And considering that you mentioned that 60% of the MABs are in the rural area, there is urgent need for the microfinance bank to embrace digital financial service to close this gap of financially excluded people. Thank you so much, sir.
My pleasure.
Thank you, sir. Mr. Bass, please, can we take few questions before we move to the learn and win section?
All right, sir. Thank you very much. Okay. We have a lot of questions here. Quite a lot of questions. A lot of people are asking if the slide will be shared. As you've been told earlier, the slide will be shared at the end of the program. Forget there will be a learn and win session where you'll be asked questions regarding what you've learned, and you stand a chance to win a shopping voucher worth 50,000 naira. Okay, we have a question from BP, but I think the question has been rephrased because of for more clarity. He wants to know what the objective of CBN is with regards to open banking, and if the easy access to loan in seconds is intended to encourage the connection, credit bureau API platforms, or discourage its use. And this question is directed to Mr. Bruno Mustafa, who is ably represented here by Mr. Adedichi Adekunle. Over to you, sir.
I didn't hear the question properly.
Okay, the question is this. What is the objective of the CBN with regards to open banking? And if the easy access to loan in seconds is intended to encourage the connection to credit bureau API platforms or discourage its use? Try to understand the term open banking and understand why, when you mentioned that easy access to loan in seconds, is trying to know whether it's intended to encourage connections to credit bureau API platform or discourage its use.
Okay, I'm not sure open banking is intended to discourage the use of credit bureau API platform. One of the things that you expect the banks to be able to do, and I think Mr. Owachiku highlighted it when he was making his presentation in terms of digital lending and what they've seen so far. There are a number of things that is done in the background before you can access loan instantly and get those loans done. So it's not just connection to the bank. I'm sure there are connections to checking credit history, connections to checking identity, so that they know, when I was making a presentation, I was talking about the 5 C's of credit. There are 5 C's of credit that you expect a lender to understand the person, to know the capacity of the person to repay, the willingness of the person to repay, to have an understanding of what the capital will be used for. So there's a lot of work that is done in the background before instant loan. So the instant loan that you see by accessing, when you talk about open banking and accessing digital platform to borrow quickly, does not negate the fact that there's some work that is done in the background. So it's not intended to take away anything that the banks are doing with the credit bureau. And as the bank knows as well, before they lend, one of the things that we ask them to do is to do a credit check on at least 2 credit bureaus. So when we've said that, it doesn't negate the fact that you must still do that.
Thank you very much, sir. We have another question here from Ojagbe Aikel Muniel. I think this question borders on failed transaction through many of those questions, but I'm going to take his own, and it reads, one of the challenges of the electronic channel is the ISP and failed transaction from sending bank and receiving bank. What is the regulators, the CBN, need to solve these issues? This is still to you, sir, Mr. Adenichi.
No problem. Thank you for that. And I noticed that there were a lot of questions around that in the chat box as well. There are a number of things that we started doing or we're working on with both the bank and the payment solution providers when it comes to the failed transaction. One of the first things that we've done is that we've engaged the bank and the payment solution providers, and we've set certain timelines for them. And they come back to us to say that within this timeline, our payment infrastructure will be improved. And it's not just the bank, the payment solution provider, we also have the switch companies that the national switch needs as well. A lot of them got to the limits of the capacity of their payment infrastructure because of the movement from cash onto the platform. So there's a need to upgrade the infrastructure, and that's one of the things I talked about earlier on. So there are certain timelines that have been set for them, that have been agreed with them, so that they can enhance and improve their payment infrastructure. Now, in addition to doing that, the CBN is also developing a digital resolution system, a central digital resolution system where all failed transactions and all these transactions are reported into. It must be properly manned and resolved centrally. And then for us from the central bank as well, one of the things that we'll be doing is monitoring to ensure that these failed transactions are resolved within stipulated timeline. And where the bank or the PSP fail to resolve those transactions within timeline, there are appropriately sanctioned. So those are some of the things that we're doing in the background to ensure that there's an improvement in the payment infrastructure, going forward. And these deadlines that have been set at sacrosanct, everyone must meet that deadline. And it wasn't that CBN set the deadline. The banks and the PSP came back to us to say by these dates, our payment infrastructure will be improved to accommodate the volume of transactions that we're seeing now.
Thank you very much, sir. We have another question from Uwabuna Augusta. I think this is to the president of FinTech. What are your plans towards the rural areas regarding the ongoing digital banking, considering their level of literacy electronically? I think this is from, yes, Uwabuna Augusta. Over to you, sir. Mr. Adebajimo, over to you. Okay. Okay, Mr. Christopher Putin might want to answer that question.
Okay, please, can you come again with the question?
Okay. What are your plans towards the rural area regarding the ongoing digital banking, considering their level of literacy electronically?
Okay, yeah, like in my presentation, I said that, I really said that in the rural areas, we have opportunities there. You have about the access to finance report from EFINA that states that. So microfinance banks in terms of product development or I mean, whatever, it is, we can't just come out and say, this is one size fits all. If you are in the rural area, the first thing is check the financial behavior of the people in that area. That is one. Two, measure the gaps that exist in that area. That is two. Then, of course, we know what is called, our own, the micro and macro. That is the SWOT analysis. Do that. Then you now deploy, or you now sit back and ask yourself, do we have what it takes to give these people what they want? If you have it, develop it. If you don't have it, go for partnerships and develop. But the truth is that the rural area, unlike our thinking, the rural area, they are very, very enlightened when it comes to mobile phone penetration and usage. So it is necessary and expedient that we develop products and services for that area. Look at the area, what they want, what is lacking there, and just fill in the gaps. I don't know if I answered the question.
All right, can you hear me, Paul?
So, Lekon, we can't hear you.
I said because of our time, we will take learn and win session. If time permits, we'll go back to getting more questions from our listeners. Madam Mary, can you please share the questions? Let's begin. Chat room will be open for all. You can send in your answers. Our speakers will have to pick our winners, but we'll be at the end of the program.
All right, thank you, Mr. Abbas. This is one of the most exciting sections of the program, and sorry, let me quickly call up the questions. Our participants, I hope we are ready for this section. We are ready, just say yes on the group so that we can start.
Awesome. We have a lot of yes already.
Okay, rules to participate in this section. Please indicate the question you are answering and send your answer to the panelists on the chat box with your name, email, telephone number, and company's name. So the questions will be projected now. You have a minute to answer each of the questions. Can you see my screen?
Yes.
Okay, we are good to go. All right. Sorry.
Okay, the question reads, just in case you can't see it, judging from the regulator's point of view, what are the four main groups, in brackets, stakeholders to benefit from cashless policy? So as you have been told, kindly drop your answers in the chat box. It is the fastest figure. So answers are coming in already. Please don't forget to put your name and your phone number so that we can easily contact you if you've won at the end of the program. The format should be your name, your phone number, your email address, and your answer to question number.
So can we go to the second question?
10 more seconds, please.
Okay.
Okay, we can go to the next question. Question number 2 should follow the same format. Mr. Adeni Jadikule might want to help with the winner of the first question.
Sorry.
Okay, you want me to say that now?
Okay, hold on, please. Okay, I'll move to the next question, please. Mr. Joshua Kute might want to help with the second question.
I
Help
think the
picking the winner.
second question is from the president of FinTech Association. He was the one that highlighted this
That's
when he
okay.
was talking, yes.
Okay. He's not, he has left, I suppose.
Oh, sorry, Mr. Bass. Apologies, let me bring up the question again.
Please. Okay,
Can we see?
I think, yes.
Okay. So we'll move to this third question.
I think you should be the winner since he has left. I don't know if we can.
I will do that once I stop projecting. Now I can't see
Okay.
the responses.
All right, thank you. The third question, 3 drawbacks of digital lending. What are the 3 drawbacks of digital lending? Mr. Joshua, put my up with that.
No, this is from Mr. Wachuku's slide.
Okay. Okay, so Mr. Wachuku, it's over to you. We'll be expecting you to announce the winner. Okay, can we move to the last one? I guess it should be for Mr. Joshua Kute. List at least 3 ways MFB can reposition itself to reap the benefits of this policy. . Don't forget to add your name, your phone numbers, and your email address to the answers. All right, thank you very much. So we can move to the next one, which is the announcement. So Mr. Adenichi Adekule, we have our first winner.
Okay, from the chat box, you said fastest finger first. There are a number of correct answers there, but the fourth correct answer at the top was Omole. Unfortunately, the person didn't put the name, contact number, but not the fourth correct answer I've seen.
Okay. Omole, please.
Omole was the fourth person to get it correctly.
Okay, we'll get that. Omole, you will be contacted at the end of the program. Thank you very much for the answer. So, Madam Mary, the second answer. Can you announce the second winner, please?
Wow, I can only see one person responding to the second question. He says Sweden, China, Kenya, and India. Yes, he did mention, I know he mentioned China, he mentioned Kenya. I didn't hear of India, but he also mentioned Nigeria.
Can we have his name or name?
His name is Mr. Bankole.
Okay, other information you can share with me privately.
Yeah, I'll do that shortly.
All right. Thank you very much, Mr. Bankole. You have won yourself a shopping voucher. Same thing with Omole. You have won yourself also a shopping voucher worth 50,000 naira. Let's have the third winner being announced. Mr. Funa, can we have the third winner, please?
Can you hear me, please?
Yes, we can.
The first name I saw that got the answer is Adobaman Judith.
Okay.
Yes.
Adobame.
Judith.
Judith. All right. So Judith Adobame, you have won yourself a shopping voucher. Congratulations. Thank you very much. Can we have the final winner, Mr. Kute?
Okay, thank you. Can you hear me?
Yes, sir.
Yes.
Okay, the winner for, I think the first person that got it correctly is Ugochukwu Echefu of Rich Credit Limited. I think Port Harcourt or something.
Okay, you can, and that's enough information. We can share the rest privately with me, please.
Okay, thank you.
Thank you very much. Ugochukwu. Ugochukwu. Sorry, can I get the name again, please?
Ugochukwu.
Okay.
Then Echefu, Echefu.
All right. Thank you very much, sir.
Yeah.
Congratulations to Omole, Bankole, Adobame, and Ugochukwu. The four of you have won yourself each shopping voucher worth 50,000 naira. Thank you very much. And thanks for everyone that participated. Thank you for all answering the question. Unfortunately, we can only share this gift with 4. We are all winners, as you can see. And I believe we have all learned something. Thank you very much. Madam Mary, over to you.
Thank you so much, Mr. Abbas, and to all those that participated. Thank you. I hope we had fun on this section. Thank you so much. I don't know, Mr. Abbas, can we take on 1 or 2 more questions before we hand over to the MD for his closing remarks? I know we've exceeded our time. So if we can just have 1 more question.
Okay. Okay, Giwa Lucky wants to know Okay, this reads thus: what are the legal processes of upgrading from traditional lending to digital lending? We do mostly with retail lending. How do we accommodate this group of customers? I think the question is for Mr. Ade Nindi yet again.
Any of the speakers can attempt to it.
Sorry, what was the question?
Can you answer a question again, Adi?
Yes, we still have more. We have more. Okay, too many. Okay, sorry.
Echo, can you just repeat that question?
Oh, okay. Sorry, 1 minute. Kigiwa said, what are the legal processes of upgrading from the traditional lending to the digital lending? We do mostly with retail lending. How do we accommodate this group of customers? He wants to know the
legal processes.
Yes.
There is no, it's basically the same legal framework that applies. You have a banking license, or you have a lending license, you are permitted to be in the business of lending. I didn't hear the aspect of retail. I didn't hear that aspect if they can be accommodated. I didn't hear that aspect of the question. But there's no specialized form of licensing that is required for you to lend in the digital space if you already have the approval of the central bank. If you're a bank, you already have a lending license. If you're a fintech, you would have had approval from the central bank. So you do not necessarily require another extra layer of legal requirements.
Yes, sir. If I may please add to that, I know some banks, mostly MFBs, engage in partnership and JVs in the event that they don't have the required capital to actually progress in that direction. So that's also a consideration we may want to look at, apart from the legal framework.
Thank you very much, sir. Mary, I think because of our time, we might want to over to you.
Okay, thank you, Lekun. And to our wonderful participants, sorry, we've exceeded our time. This program was meant to be closing around 1 p.m., but we have exceeded our time. So please bear with us. I hope we've learned a lot. Me personally, I've gathered a lot of information that I'm taking home. So on this note, I will be handing over to the MD for his closing remarks. Thank you.
Thank you once again. Thank you very much, Mr. Joshua. Thank you very much, Mr. Ikeme Fona and Mr. Adeniji. Thank you for gracing this occasion. We don't take it for granted. Thank you very much. We call every time and you answer. We appreciate that so much. And to the wonderful audience again, I want to say a very big thank you. But then, if there's any closing remark I would have, developing economics or developing how do I say? Developing economics is very clear. One of the things it says, and this is not just in academia, the journals are very precise, and the evidence is also precise based on statistics. Any country that wants to grow must base itself on institutions, whether you're creating an MFB so you can reach the grassroots, whether you're creating fintechs and the institutions must be there, whether you're creating credit bureaus or you're allowing license allocation for that has to be in place. And more importantly, you must reduce the information asymmetry. In other words, people need to know, whether they want to inquire about the legal framework, we need to know these things. And so for that purpose, that's one of the reasons we brought all of this together. And we'll continue with this series subsequently. Once we're done with series 1, we'll go to series 2, and we hope that you would join us once again. Thank you once again, everyone, and have a wonderful day.
Thank you so much, sir. Thank you all. Thank you, Mr. Joshua. Thank you, Mr. Kemefla. Thank you, Mr. Ade. And
thank you, everyone.
Mr. Adekunle, we really appreciate you all. Thank you for answering our call when we called on you. We hope to do this next time. Thank you. To all our amazing participants, please You have been amazing, and we want to thank you for your ability of leaving your busy schedule to join us on this program, and believe that you've learned a lot that will improve your businesses. And to our subscribers, our loyal users and customers, we thank you for being part of First Central Credit Bureau family. Please continue to make use of our services. So on this note, bye everyone.
Bye.
Goodbye.
Okay.